Welcome today to our Modern Agent session about E&O, what you don't know can hurt you, and kind of learning what those things are so you can prevent that from happening. I am Fritz. I'm with Firefly Agency. We help agents become independent and add carriers if they'd like. But we're really here today to talk to you about the E&O thing. That's all this is going to be about. So today's special guest is Tabitha, and she is from Utica. And I figured rather than me tell you about her, we'd just give her a moment to do that. So Tabitha, would you just introduce yourself to the group?
Hi, I'm happy to join everybody today. My name's Tabitha DeGirolano. I am with Utica National, as he mentioned. I am the risk management specialist for their Agent E&O program. And I wear a few other hats too, but that's the main role. I've been with Utica for about a year now, but I came to them with 25 years experience in insurance, with 20 of that focused specifically on Agent E&O. Prior to working with Utica, I was with RT Specialty and All Risk and Rockwood Programs. So I've played both the program manager role, the broker role on both the retail and a wholesale basis. And I've kind of done a little bit of everything in the Agent E&O world. I know a lot of you are Utica insureds, and so I appreciate your business. For those that aren't, if you have any interest in learning more about our program or getting a quote, you'll have my contact information after the presentation, and feel free to reach out to me at any time, or even if you just have a risk management question.
Yeah, thank you for that, Tabitha. And I'll just put in a plug for both Tabitha and Utica as well. Part of the reason we felt confident and excited about having this session is because we have somebody like Tabitha who's able to be with us to bring some genuine expertise and real life experience to this line of insurance that affects all of us, but that we probably don't know very well. In fact, I have a business partner who said, you know, if there's a group of people who are probably not great about reading contracts, it's insurance agents. And you can tell that's true. And sometimes you look at their E&O coverage. So Firefly itself, we have been using or worked with Utica for our E&O coverage for several years now, both for our Firefly agency overall, and they've just been wonderful with us to create a program where if people decide to work with us at Firefly, usually within like 48 hours, we can get an E&O policy approved. A great thing about Utica is that the rates are good, but the coverage is particularly good too. If you have a claim, and you've got a Utica policy, you're likely to have some of the things that maybe a cheaper policy might not have. So the point today isn't to necessarily sell you on Utica, but we would absolutely just say we've had a good experience with them. And so if you have any questions about that, you'd be welcome to and in fact, we'd invite you to talk to them. We're going to start just by way of overview. If you want to know where we're going today, we have two major topics that we're going to cover. One is common agent misunderstandings. These are things that we have heard, both Tabitha and I, from agents. And the second is a couple things that you can do to reduce the chance of E&O claims. Before we do that, first a quick disclaimer, right? Which is that neither Tabitha and I are attorneys. So we can't give you and aren't going to give you any legal advice. If you have any legal questions, you need to go to attorneys for that. Obviously, if you have questions about your E&O coverage and how it works, we can't answer that, particularly, especially if it's not a Utica coverage, but would invite you to, if you have questions from this, that's awesome. Take it to whoever is your resident expert on those things in your agency. And as far as kind of the theme for today's session, there's a saying that I've heard, in fact, I think it's at the beginning of a movie along these lines. It says, it's not what you know that gets you into trouble. It's what you know for sure that just isn't so. Or to put it another way, and maybe what you heard from your mom, back in the day, is what you don't know can hurt you. And so really what we're trying to get at here today is just to go at some things we've heard that we think are genuinely maybe some actually commonly held misunderstandings or not complete understandings. Some of these may apply to you, some of these may not. The last thing, though, that I would say on this before we begin is that everything that we talk about today is important not only for you, if you're the agency principal to do, but if you have other people in your office. Boy, everybody needs to be on the same page with this stuff, or else you're kind of like a leaky bucket, right? Where you feel like, front door's locked, garage door's closed at night, back door's wide open because somebody else isn't doing these things or doesn't know. So it may be that this recording or some things you learn from it would be really good to share with people, things that are new to you, so that your whole team's on the same page and you don't feel like you've got it going, got it figured out, and it turns out you don't. So let's dive in with the first one. Agents have said, and actually, Tabitha, this is one you had heard, I am perfect. I don't need E&O or even E&O training. And or kind of related to that, my customers are my friends and they would never sue me over a mistake. This one
Yeah.
we realize is probably not everybody, right? But go ahead, Tabitha. I know you had some thoughts on this one.
Yeah, I was going to say that's kind of a common misperception. And we actually have an open claim right now where we have a sister suing a brother over an improperly placed umbrella. So, these things definitely happen. I've seen it over the years. Relatives suing each other, business partners, ex-best friends, whatever the case may be. So don't assume that just because of whatever relationship you have with somebody that they won't turn around and sue you. When there's enough money on the table, they will.
And which is the only thing really I was going to add. My dad, who was my inspiration in insurance, who got me into it, he would say the way he'd say it is, when the chips are down, people will look for money wherever they can get it, and
Mhm.
they will come after you and they will sue you. I wouldn't want to be at the dinner table at Thanksgiving where the sister and brother, one of them suing each other and so forth, right? But or if it's a dear friend, in fact, those are the areas where you probably be most grateful to have that works and that you have things documented and so forth. But related to the second one too, we did have an agent years ago who said to us, "Oh, my customers would never sue me because they trust me and we're friends and so forth." Sure enough, he did have somebody who sued him. Now, in this case, he did have good documentation, and it was very quickly summary judgment was thrown out just because the documentation and so on was so good, it was so clear. But just don't make the mistake of feeling like you're not going to need it and that all is going to be well. So that's, I think, a pretty easy one. The next one here, and this one actually is one that made me think as we were preparing this session for today. I learned a few things myself. Certainly, we've heard agents say, and I have to admit, I have said it. Sometimes when I'm quoting or presenting, use language like apples to apples or comprehensive or full coverage, and feeling like that's fine. And so here we would ask, well, should you be worried about that or not? So I guess, Tabitha, I think you had a thought or two on this one too. Would you share your experience or thoughts on that?
Yeah, I also want to make a comment specifically surrounding limits. You always want to be really careful about limit recommendations. And, you really don't want to recommend limits. You don't want to make a comment like the limits will be sufficient. We actually have a claim right now where the agent made that comment of saying, yes, I feel these are sufficient, based on other properties that we've insured. Unfortunately, the limits were very much insufficient, and that's a claim that's going to pay out $5 million.
Ooh.
So whenever you're talking particularly about limits with insureds, you kind of want to put it back in their court of, yes, this is what I might, maybe you say, I typically see this type of limit for this type of risk, but you know your risk better than me. You know what you should need in order to be sufficiently insured for your risk. So I can give you guidance, but you need to make the decision about the limits at the end of the day that meet both your needs and what you can afford.
And then related to that, we might add that, things like saying, I'm doing an apples to apples comparison. I think part of the reason, and by the way, there are some documents that actually Tabitha is one of the authors of, that we're going to include on the web page after this session that have some specific guidance. I think there's 5 of them. Is that right, Tabitha? Or there's 6, 5 or 6. And so we'll include those when we send this out. But this concept is in there too. And I think part of the idea is if you say apples to apples and there's a claim and there's,
And it
a
better
disagreement,
really be apples to apples
yeah,
at this
that if
point,
it
because
really
that one
wasn't,
mm,
that's right.
yeah.
You're professionally saying this is the same thing you had before. And if it is not, then you could then be held liable if they did have a coverage before, they don't under you. And then there are words like comprehensive or full coverage that certainly can be misunderstood by non-insurance people and even within the business. Comprehensive, does that mean the comprehensive coverage on auto, or it means that it covers everything? Or some people feel like full coverage would include towing, at least when they need a tow bill, but at the time that you talk to them, they did not. So just be careful in the words that you use when you're speaking about insurance with your customers or prospects. So the next one, and this was one of those ones that I was like, are you for real? And it was an interesting talk to Tabitha about. Certainly agents have said, I myself in the past have said, there really is no risk of me calling customers to warn them of a cancellation coming up for non-payment of premium. And it turns out that that really does create exposure for your agency, right? Now, in this case, to be really clear, what we're not saying, what I'm not saying, Tabitha's not saying is that it's like wrong, like morally wrong or unethical to call customers about that kind of a thing. I mean, I know when I was a brand new agent, I wanted almost desperately, if I'm honest, to keep every policy that I had going. I needed the commission. I needed it very much. But the risk here is that if you set up a precedent that you're calling somebody to warn them of a cancellation for non-payment, and then you miss one, and then they cancel, and then they have a claim, that they could say and go to court and say, hey, yeah, this agent was always called me about it, was supposed to, didn't. It's their fault because I would have paid if they had called and so forth. So the point on this one is it might be too risky. You just have to kind of ask yourself in your own agency, is that something that you really want to do? And actually, Tabitha, you had shared with me that certainly where it's probably the biggest risk too is the people who are chronically bad payers, right? Who keep coming up
Right.
with not paying the bill. And that most people, when they get the actual cancellation notice, will respond if they mean to get it going. So, anything
Yeah,
else you would
you
add on that
don't.
one?
Yeah, I was gonna say you don't really want to keep holding the hands of bad paid clients. Honestly, they tend not to be good clients all the way around.
Mm-hmm.
If they're people that you have to chase constantly anyways.
Mm-hmm.
Um, what I would say is that if you do feel strongly about doing this, then you have to be absolutely consistent about it because it's always going to be that one that you miss that ends up being the
Mm-hmm.
claim. This is actually a fairly common cause of E&O claims. So this is something that happens regularly. So my best advice is to just err on the side of caution and just don't do it. Let the carrier notifications be the notification.
Yeah. Well, and related, so somebody said in the comments, this actually happened to one of my last agent's office and they were sued for it. So, okay, somebody knows that we're not making this up. And also there was this question. Let me just pop this up on the screen right now since we're on it. Let me switch over to the Q&A mode here. What if a client's policy has canceled? Is it okay to call and ask for reinstatement? So what would you say on that, Tabitha?
I would say, actually, if the policy is canceled, you do want to reach out to them at that point because you want to say, hey, your policy is now canceled. You need to either try to rectify this or replace the coverage. And I can offer to help to do that for you. So it is best to put that contact out there. At that point, it's on them to come back to you as to how they want to pursue it. If reinstatement's still an option, that's great. If you need to move on to another carrier, so be it. Although you may want to ask yourself if you want to, if they're a bad pay client at that point. But
Good point.
but it is actually important that once they are canceled, that you reach out and at least offer to help them further at that
Hmm.
point.
Yep. So I hope that answers your question, John. That was a good one. And I suppose at that point, part of the point is they're not going to cancel because you didn't call it already has, and you're just trying to fix it
Hmm.
at that point and let them
Right.
know. So great question there. So let's move on to the next one. Agents have said, and actually this is addressed very well in another one of the articles that we're going to give out to you from Utica. If my customer doesn't tell me that their situation has changed, the idea here being that it would have affected a coverage need that they have, that is their problem, not mine. And so I know you had some thoughts on this one, Tabitha. So what would you say?
So kind of your best practice when you're dealing with renewals, and what I would kind of consider probably the easiest way to go about it. Some people like to call all of their renewals. I personally think it's best to communicate to them in writing, whether it's whether you're still sending mail or email, etc. But to give them like a checklist for the renewal of, to identify if things have changed, if there's possible exposure changes since the prior year. And you can put into that notice that, if it's not returned, that everything will renew based on the prior provided information. And that will go a long way towards protecting you if there's changes at renewal that they didn't advise you about. And you have that documentation further to show that you communicated this to them.
Hmm. Well, and as an example of this one that I think is in one of the articles that Utica provides, there was a real life example of an agent who placed a commercial property policy that had a vacancy exclusion, and it became vacant, and it renewed several times, vacant the whole time. Still had the vacancy exclusion. Finally, there was damage to it, and the carrier said, "Well, it's not covered because of the vacancy exclusion." And then ended up being a lawsuit between the customer, the agency, and the property carrier, and it ended up being a $400,000 claim from the E&O. Because the reason being that it wasn't the carrier's responsibility because the agent should have been, confirming with that customer, "Hey, have things changed on that?" So um, just
And I think
that.
it's worth
Mhm,
since you mentioned vacancies too, that's actually a pretty frequent reason we see claims as properties that weren't vacant, became vacant. They didn't know they needed to contact anybody. So it's always good when you're dealing with property to kind of put that out there to the insureds that if anything changes, they need to contact you. Um, and even if they don't, you've got that communication to them,
mhm.
which will
Yep,
help you in the event of a claim.
yep, very true. So let's return to our next one here. Agents have said, now thankfully it's not too many of these, but we've been in business long enough to see too many agents who obviously feel this way if they don't say it. There's no big deal if I sign an application for a client. Uh, well, it is kind of a big deal, as Ron Burgundy would say. And um, we won't spend too much time on this one because obviously you really should never, ever sign an application for a client. There are tons of reasons. But one is, of course, that if there is a claim and the agent and the customer says, well, it's not the coverage I wanted, and there's evidence that you signed or that they did not, you certainly have no recourse at that point. The insurer itself might even say, we're not going to pay anything because we don't even see that this customer signed that. Now, that's not probably a common outcome, but it could happen. Um, your best case then might be to be out your E&O deductible, which, like I know for a lot of policies, is $2,500. Boy, that's a lot to pay for the. Let's put it this way: if I have a choice of get customer signature or maybe risk paying $2,500, I'm not made of money. I'm going to say I'm going to get that signature. And beyond which, if you did have a claim and there was a question at the time of the claim over who signed this app, as Tabitha, I think, uh, thoughtfully or tactfully put it when we were kind of prepping for this, she said, well, you might find at that point the quality of your E&O carrier and decide, because they may decide, well, this is not an error now. That was you fraudulently signing a customer's application, right? And
Mhm.
that's different. Dishonesty is not an error, which by the way is just it's not one of the slides that we have here, but is an important thing to know. If you knowingly do something incorrect, your E&O coverage will not cover that. Just as most homeowners policies are not going to cover you for liability of breaking the law and so forth, though there are exclusions for that kind of thing. So point here would be don't give your carrier or the E&O carrier a reason to say, well, maybe we need to not pay this claim. Just make sure you do things right, including getting those signed applications. And these days with e-signatures and stuff you can do, whether it's through easy links or carriers themselves, um, that's a pretty good way to do it. Somebody has a comment here about using a signature pad they've got for that, which is great too. So that hopefully is a really easy one. Now here's another one that I have heard sometimes over the many years. Firefly's been around 17 years. Sometimes I hear agents say, oh, well, if I have a problem, I'll just turn it over to my care and they'll just pay for it. And to me, that reflects a mindset of thinking that the E&O insurance is like a vending machine that you just punch in and say, yep, here's a claim, just pay for it, which isn't always true. Just like, somebody has a claim on a home and an auto policy, as an agent, you have to be very careful not to say, oh yeah, absolutely, the company's going to pay for that, because they're going to need to investigate the claim and see. What if in the case of something that you thought the carrier was just going to pay, it turns out uh, you didn't make a mistake. You did everything just right. You got a customer who's a good friend and they say, I wanted to have this coverage. We actually ran into this one within the last year with an agent who's actually not with us anymore. But she felt really strongly like even though all the documentation showed the customer did not elect collision coverage on a policy, well, she had meant to put it on, so everybody should just put it on there. And why is this a problem? Well, the problem is that all your documentation shows you gave the customer what they wanted. Um, and so just whether it's you, again, as an agency principal, or if you're part of an office, You should be able to have confidence in your E&O coverage, of course. But it's not just, put in your 2 quarters and out comes a can of soda. They're going to investigate the claim and look at that. And actually, one thing, Tabitha, you mentioned just the other day too, is like, even if it does, with your E&O, just like people don't want to have claims on their car or their home insurance, you don't want to overdo it, right? With your E&O. I mean, you could have your premium increased for maybe like 5 years, 10 to 200% surcharge, depending on a ton of factors, right?
Right.
And or you got a 20, again, let's just say, for example, you got a $2,500 deductible for your E&O policy. I don't know many people for whom that's just, oh, I'll just turn it in and let them take care of it kind of a thing. You've got some skin in the game there, and it's for a good reason, because it should motivate you to not, or no, it's put in positive terms, motivate you to run a good agency and prevent that from happening. So that's just not the way that would go. Anything else you would add on that one, Tabitha?
Well, something that I want to emphasize, because I think that agents can be hesitant to put in claims if they think there's a potential problem, because, well, it might be a problem, but I'm not sure that it's going to be a problem. And I don't want to put that in, and then the carrier to, react to that. And the advice I can give you is put the claim in. As soon as you know that there's a potential issue, get the carrier involved. In part because they're claims made policies, so when you report, it's important, but also because the E&O carriers want to be involved as soon as possible. And I can tell you from underwriting E&O for a long time that underwriters do not go, oh, they put in a potential claim, that's bad. Um, Underwriters are more likely to look at it as, oh, they put in a potential claim. Fortunately, we got right onto it. It didn't end up, becoming a bigger issue, and that's great. Now, if you're putting in potential, like a lot of potential claims constantly, that could maybe provoke some questions. But typically, for just putting in something, even something that maybe ends up with a little defense cost, a lot of times the underwriters aren't even going to impact your premium for that at renewal. So it's very important for us, though, because the sooner we get into the process, the sooner that we can start mitigating it. And the other thing to keep in mind too is that you don't want to admit liability. Agents have an unfortunate tendency to do this. Um, and usually when they know they made a pretty cut and dry mistake, like you were supposed to add a vehicle, you didn't add the vehicle, now there's a claim related to the vehicle, didn't get that. So they go, oh, okay, that's my fault. Don't say that. Just go, okay, I need to look into this further, contact the E&O carrier, get some guidance from there. Because even situations that maybe you feel are pretty clear cut, there could be some mitigating factors there for the E&O carrier. So, and frankly, you really shouldn't do it, because depending upon the E&O carrier you're working with, that could also invalidate your coverage, because you are admitting fault. Now, most E&O carriers are a bit generous in that regard, but not all of them. So keep that in mind. Not all E&O carriers are the same.
Yeah, that's some really good advice from Tabitha there. So if you're taking notes, hope you got that one down. Let's see what we've got next. Oh, I like this one. Now, partly because, Firefly is, we're an agency, but we're an aggregator of sorts, in that we, people can get a whole lot of direct appointments for carriers with their carriers through us without all those per carrier production requirements. But we've heard people say this, and not just in the Firefly setting. In fact, Tabitha and I talked about this one. Agents have said, well, I work through an aggregator or an MGA on this carrier, so if I have a problem, their coverage will take care of it for me. And actually, I love this meme for this one. It's an old ad. Funny enough, it's an insurance ad clip there. That's not how that works. That's not how it works at all. In fact, the E&O liability and coverage is covering the individual who's making the mistake. So, in this case, even if you're working through an MGA, an aggregator, a network, whatever you want to call it, it is your E&O that's going to be the one that responds. So, don't feel like, well, hey, I don't mind that there's an E&O deductible, because I'm not going to be the one that pays it. That's not going to be the way that actually unfolds. And so please just don't make that mistake. Related to that, just, obviously for all these reasons we're talking about today, make sure you have E&O coverage and that you're keeping that in force.
Yeah, and in all
Go ahead, Tabitha.
honesty, the MGA, the aggregator, the wholesaler that you work with, a lot of times they don't get roped into the claim. The clients aren't aware of them, or, there's not really a direct issue between the wholesaler and the client. So while there are some arrangements where maybe you might work something out where they extend some level of coverage to you, unless you have that, don't assume that they're going to come in and save you.
Yeah.
Particularly like when you're dealing with wholesalers, some wholesalers are great. A lot of them are basically coverage facilitators. They facilitate
Hmm.
you getting to the market, but they're not there to hold your hand.
Yep. And someone is just asking, do Firefly agents need to carry an individual E&O to be covered? Then the answer is yes, but we can help them get it super fast. Or sometimes if you have an E&O from before, you can, as long as we can take a look at that and make sure that it works, that can also be fine. But relative to this here too, only other thing I'd add is if you think you're going to rope in your E&O, your aggregator or your MGA's E&O, that carrier is going to look at it and see if they can disclaim it, right? And say, no, hold on,
Hmm.
no, you're the one who made the mistake. This is clearly your thing, and you go ahead and take care of that. Again, they don't just dive in and say, oh, please tell us, who do we write a check to, right? They're going to look to see who actually made the mistake and where does that fall. This next one here, I think we've pretty much already addressed actually. By happy coincidence here, agents have said, if there's a problem, I'll just take care of it myself and not turn in a claim. Well, if you did that, you might be like this very cute but maybe confused seal, thinking, oh shoot, what have I done? So Tabitha talked about that really that the idea is it is much, much, much better, as counterintuitive as it might seem, to report a potential E&O claim to your carrier. And part of the reasons that she already said, so I don't think we need to go into too much more, is for one thing, it could invalidate your coverage if you try to start settling something outside of your carrier. If you look at your contractual language, it can say right in there, if you try to settle it, then you've basically taken us off of it. Also, let's say it's something that seems small and you pay it, and the customer says, okay, after you pay that, and I'll be done. And then later they say, actually, my knee is still hurting from that car accident, and now I need another. Now I need all these medical bills and all the stuff that piles up. It could get into something way bigger, especially if there's an injury. So again, the point here is, although you don't want to be thinking of your carrier as a vending machine and just I'll turn it and I'll cover it, it is better, I suppose, pardon the example, like if your kid were kidnapped and they're saying, don't you call the police or the FBI, you know what the first thing you should probably do? Call the police and the FBI, right? Get the people who are the pros on your side, and that's certainly true with E&O as well. So those are some of the questions that we had, or things that we've heard agents say. And now, actually, there is a question though. Let me put this one up, Tabitha. I know you're going to say something there too. This one actually relates directly to this, so let's hit this one now. Francisco asks, if the error is less than the deductible of your E&O, can you just pay out of pocket and not have the E&O be involved? So Tabitha, could you answer that one for Francisco?
So, kind of the first thing I would point out is pretty much every E&O carrier asks you if you paid any claims out of pocket as a an application question. So you're going to have to disclose it either way, and they're going to take that into mind in the underwriting. So it really doesn't behoove you to not disclose that or not reach out to them. And as Fritz was saying, it's better just to get the carrier involved. If you want to pay it out of pocket, we'll work with you to help make sure you get the right release language. And I have seen claims before where somebody started off trying to just, pay 1,000, 2,000 to get it to go away, and then they came back trying to get more bites at that apple. So it's always better just to involve the carrier.
Yep. And the other thing I would add that I don't know if we've said yet too is, let's say Francisco, in that particular instance, that you've got maybe the claim is going to be under the 2,500 bucks. It's still good to have the E&O carrier involved. And I don't think, by the way, Tabitha, probably they'd count this against you. But if let's say it's 1,500 to clear the thing, they'll have a document for the insured to sign to basically say, we accept this as payment in full, and we what's the release any future
Right.
claims and so forth. They have the documentation and the legal people for that kind of thing, rather than you going and try to have an attorney figure that out, or the cost of doing that. So that's one where even if it's under the deductible amount, it seems to me it really does help to have them on your side with that. So let's take the next couple minutes just to talk about some things you can do to reduce the risk of an E&O claim. Some, of course, which relate to things that we've already talked. So we're going to talk about some different ones. But again, just a reminder, any of the things we've talked about require not just you, but your whole team to have constant vigilance, if you don't mind the Harry Potter reference. You've got to all be doing it. I did once have an occasion, I was talking to somebody who was saying they had a kind of a near miss on an E&O and was talking about it, and this person was saying, yeah, we should do a few things different in our office, but explain sometimes it's tough if you have 4 or 5 people in your office and somebody just feels like, I just don't like that. I don't want to do that. I don't think I need to do that, and that really can be problematic. So that's your problem to solve, of course, not ours, but something certainly to think about. I see another couple questions that are coming in, and we'll probably address those ones in the Q&A here at the end. So please stick around as we get to those. But let's just hit a couple of these things to reduce the risk of E&O claims. Number 1, document all your customer interactions. I got Darth Vader back here again. And a lot of the reason this is important is because in a he said or she said scenario, or you said, customer said scenario, the agent's going to lose. The law is going to consider you the expert and hold you to the higher standard. So the solution is document, document, document. So signed, fully completed applications, coverage declinations. If you can't provide a coverage, you have something in writing that you let them know, no, I can't do water backup above X dollar amount, or whatever those things are that you can't do, let that be known there. Also using checklists during your quoting process so that you can show if you needed to in court, look, I always do the same thing every time. I always include these coverages and then invite people to remove the ones that they don't want or whatever. And those processes need to be done by everybody. Is there anything on this one that you'd want to chime in on, Tabitha?
I would note, where we tend to have the most problems surrounding documentation, besides getting like coverage declinations, is conversations that are held over the phone. They're often not well documented. Um, and like you said, and he said, she said, you're just going to lose that. So it's very important to document those conversations. It's gotten a lot less expensive to record calls now, so that's something that I always recommend people look into. Just having, if you have that recording, that can shut down an argument from a client real quick, as you just send it to them and go, here's our discussion. Um, bearing that, barring that, memorializing the conversations can be very important, because sometimes you have a conversation with a client and maybe they came out of that conversation with something different than you came out of it. So having the conversation and then backing it up with an email saying, here's what we discussed, here's our next actions, whatever. And then going, if you're unclear, you have questions, please come back to me. That puts the ball back in their court, and that's very important. um, putting comments into your agency management system, that's great. And but that's not going to help you as much as memorializing that conversation does. So that would be my recommendation there, second only to actually recording the calls. But at the very least, make sure that you're putting comments in your agency management system that reiterate what you've talked about, because that will go a long way, especially when you can show that you consistently document that way.
Yeah. Well, and related to that, as we switch back over here, there was a question that John had about, well, should we send an email to follow up on conversations? That would be an excellent idea based, based on what Tabitha was just saying. It helps you to show, I mean, if that's a date and timestamp note, shortly after that happens, even if it's 3 years later when the claim is, that's going to be that's going to be a good thing to have in front of a judge to say, oh, well, interestingly, the agent put down half an hour after you talked that this is what was discussed. That doesn't mean it's guaranteed, but that would sure help a ton.
Yeah, often that type of documentation can actually stop it before, can stop
Mm,
it in their tracks and make them walk away from it.
that's true, because you can show them that, and then and they're going to say, I'm going to sue you. Well, show your attorney this note that I have of our conversation or the email that I sent after we talked. It's going to help a ton.
Mhm.
So just a couple other ones. If you don't, and for the sake of time, we'll have to move a little faster on these. We're having so much fun here. If you don't fully understand coverage or a type of risk, particularly in commercial insurance, pass on quoting or writing it. And again, this is your whole team. If you have one person that says, I'm going to be a hero and write this coverage we've never done before, they could get you into trouble. I love the Forrest Gump meme right here. But as an example of this one, let's just use this one here. Real life claim. Agency wrote, and I won't read the whole thing. But agency wrote this auto policy and a CGL and a commercial. The general liability was $1 million. Commercial auto was 300,000. There's an accident, motorcyclist gets killed, right? It's a huge claim. After the client is sued by the estate, client alleged the agent told them that the CGL would respond in excess of the $300,000 limit and said that the agent should have also recommended higher limits. Well, the agency denied ever telling him that and said that the client had been informed numerous times, but this is kind of combining a complicated coverage that was not understood probably very well by the agent and not documented, no paper backup of the discussions, and $500,000 claim against the agent that was settled by the E&O carrier. So always document in writing the discussions that you have. Make sure your coverage options make sense. By the way, here's one I'll say. Sometimes we see this, especially with agents who haven't been doing as long. They'll have bodily injury liability limits and uninsured motorist limits that are different. They got say 250, 500 for the BIPD, for the bodily injury, but 50, 100 for the uninsured motorist. Why? To save $1? Do you think when that happens, the customer's not going to sue and say, hey, on my previous policy, I had 250, 500 on the other one, right? Or why didn't my agent explain to me that it was only $1 or $2 to add those coverages? Those mixed coverages, things that don't match up. For example, in the case of this commercial one, if they need $1 million in liability for slip and fall, they need $1 million in liability in the autos. There's no difference where the claim happens. What matters is how much coverage does the insured need, right? And I could get into having too much fun with that, but if you don't know, the brave thing, the right thing to do is to back off from that. And it's 11:40, so let's kind of hop on to the next one. Here's another one. Consider adding disclaimers to your proposals. And as sort of it's true, sort of a bit of a joke too, kind of like we at the beginning disclaimed and said, look, there's some things we can't do here as part of this webinar. You'll need to do that too. I do not suggest using a meme as your disclaimer, right? But, oops, actually the next one's also saying things takes time, but we're gonna send an article to you or give you a link to it. It'll be on a web page all about some suggestions of the kinds of disclaimers you might use. Now you will note that the Utica article about disclaimers has a disclaimer, right? To say, well, you can't necessarily just run out and use this as your own. I mean, you can go ahead and use it, but they're not warranting it to be, if you use this language, you'll be great. But do consider that because it is the kind of thing, if you have documented, could really help you out at the time of a claim. The next one here too, I've definitely read about this being a challenge. Be really careful when you're asked for certificates of insurance. And this often pops up in commercial insurance. Sometimes it does for personal lines as well, though usually you might just provide a deck page so you don't have opportunities to screw it up. But boy, there are a lot of ways to get certificate insurance incorrect. You got a commercial client and then you need to add so-and-so as an additional insured or document that a certain coverage exists. If you just, or if you have a staff person you hand these requests to, hey, they need a certificate. Are they qualified to check to really see what the coverage is? If they put out a certificate saying something is covered when it is not, that will be your problem, at that point. So, and then by the way, if you're needing to add somebody as an additional insured to a policy, make sure that happens before you send out the certificate saying that the person is added as an additional insured. And we got an example for this one that came from Tabitha and her team here too. A real life claim based on this one. So personal lines carrier, they found the car was being used for commercial purposes, non-renewed the policy. Non-renewal notices were sent. Sometime after that, the agent sent a certificate to the client indicating coverage was in force. So totally the agent's fault here. Client had an accident, damaged another car, said they never got the non-renewal notice. And even if they did, didn't matter because their agent sent them something showing they had coverage. Naturally, the agent's in trouble on here. Now, it was a lower amount on this claim, but just an example of the kind of thing that can happen if you're, if you're just not super careful about those certificates.
And
Anything else on
honestly,
that one, Tabitha? Yeah.
Yeah, I was just gonna say the most common issue there really is just issuing certificates when the coverage isn't active.
Mm-hmm.
So, that's super easy to avoid. Make sure you have a step in the process, that involves making sure the coverage is in
Mm-hmm.
effect first and foremost. And I think a lot of the problems with certificates often come along because A lot of times people will have a CSR handling those, and they sort of get into this automatic mode, especially if you get a lot of COI requests, of just forwarding them, forwarding them, forwarding them, and the CSR is going on auto. So, it's often best to have two people looking at them. Having the producer take a look at it before it's sent out. Just having some sort of two-check process to make sure that you're getting the right information on them before they're
Hmm.
released.
Yeah. Well, and we've come to the Q&A part here, and we got a couple questions that are really great. So let's hop over to that and start with, let's see, here's one. Giselle asks, if you're an insurance agency and your written premium increases every year, do you recommend to increase the E&O limits to in each renewal? Now, that's a really interesting question. Tabitha, do you have a thought on that?
So, limits can be a little bit challenging. My general rule of thumb is that you're going to want to have at least enough limits to cover a full loss on the highest limits that you're quoting to your insureds. Um, and possibly more because, there's always the possibility you could get multiple claims in a year. Now, I will say the vast majority of agents' claims actually do settle under $1 million, but I wouldn't use that as a barometer. Because I've certainly seen the 15, 20, $25 million claims too. So you really kind of have to make a decision somewhat based on what does your client base look like? What sort of limits are you quoting them? And, you know, also keep in mind that if you live in an area that's maybe subject to, like hurricanes, for example, like in Florida, um, you have a higher probability of having a lot of claims at once because a hurricane comes through, it impacts a whole lot of people at once, and if there was any issues with the policy placements, they're going to come out in the water then. So, like I'm going pretty far back here, but I know like when Katrina happened, we saw many agencies that had numerous claims all at once
Hmm.
and quickly went through their E&O limit. Um, so that would kind of be my rule of thumb is at least try to have as much limit as you have out there for your clients. But, as your agency grows, you'll certainly want to increase your limits because your exposures get greater.
Well, and can I add to what I was going to say too is the exposure. My dad was really big on saying, well, what are you actually insuring? Well, if you know you're insuring that some coverage that you were supposed to provide wasn't there, and that's your amount at risk, right? So, and that's why probably pretty much everybody needs $1 million because even an umbrella puts you there. But I will say we have some agents who write a fair amount of commercial and they get in some bigger limits and coverage amounts and so forth. And so maybe they really do need to go to a 3, 4, $5 million limit, um, just because they're writing some big stuff, and that would be there. So that's a really great question, Giselle. This is an interesting one from Mark. Asked, what if you have a client who says he wants an umbrella policy when he really doesn't need one? He only wants it because his brother has one. And my guess on this one, Mark, is what you're getting at is, well, if you say, oh, I don't think you need that, and you don't write it, and then of course the person goes and gets sued for, $1 million, that they might come back and say, well, my agent told me I didn't need it. So my thought on this one, this is more kind of like on the sales end of things, is I think it's a great thing as an agent to educate somebody. And if you have somebody whose collectability really is low, and that the underlying limits that they can get on auto and home policy is well more than they could ever be collected for. They probably don't need one. You could explain that to them, but then let them know, hey, if you want to buy it, here's the price. I'll write it for you if you want, and you have that documented in the file. Hey, here was the policy. They decided they didn't want it. But if somebody wanted to buy an umbrella policy, I don't think I would say, well, no, I'm not going to do that for you, right? Um, largely because of this very kind of a situation that could pop up. Tabitha, you have been fantastic. I want to give a lot of credit to her. Many of the topics we discussed, the questions that we wanted to answer come from her experience, and some articles that she's written or been a part of writing. We're going to include, as I said before, links. Actually, we'll send, they'll be on the website, links to these articles so that you can read them. They're generally just 1 or 2 pages, short and sweet,
Mhm.
really good. And also, just another plug for Utica as well as for Tabitha. If you haven't looked at your E&O coverage in a while, or you're wondering, hey, does my policy cover legal defense outside of the limits? Or is the legal defense going to reduce my $1 million of coverage? Some of those things that have to do with the quality of the policy that you have. Tabitha's not going to hard sell you. In fact, Tabitha, really, you're not even actually a salesperson, are you? So
No,
she's
not at this point.
yeah, so she's just someone that if you said, hey, who could I talk to about that? Can't hurt, especially if it's been a little while. And we just highly recommend Utica. They've been a wonderful partner for us at Firefly.
I do want to say, I've worked with a lot of E&O carriers over the years, and to be perfectly honest, a lot of the reason I came to Utica is because they had a great product that I got tired of losing business to. So,
Ah, all right.
so that really kind of speaks to them. They really are different amongst E&O carriers. So you know, I would say definitely take a look at them if you don't have them now. And we really do go above and beyond to help the agents and try to give them risk management guidance. And we really want to educate people. So.
Yep. Well, and I can relate to your experience of kind of competing against Utica. Like back when I was a farmer's agent for 10 years, which was a great company, took care of people great with the claims, but their appetite was just so narrow. You just get tired of losing business elsewhere, and you say, "Darn it, I want to sell the other stuff too," which is where part of the reason Firefly came about. But I didn't know that part of your story, Tabitha. That's interesting that you said, "Well, if I know my stuff, I want to be at the one that I keep losing business to," and so forth. And that's not to say anybody's E&O coverage, if you got with other carriers, isn't great. But just like any insurance, it can be good to take a look every once in a while. So again, just a really big thank you to you, Tabitha. We really appreciate it. Thank you, everybody, for joining us. And we hope this is helpful and to see you at a future session.